Hi, so today me and my fellow interns are going to be doing an overview of the Germany residential real estate property market and why it's a great time to invest right now.
All right. The current mega trend of uncertainty in investing has become increasingly prominent as even reputable organizations such as JLL have been acknowledging its impact. Investors are reevaluating their strategies and adopting a more cautious approach, particularly in the realm of real estate. The recent pandemic and conflict in Ukraine has played a significant role in amplifying this trend. Uncertainty allows for informed investors to capitalize off of the property supply and increasing demand in rental properties. To summarize, the current megatrend of uncertainty within investing has caused investors to reevaluate their strategies, especially in the real estate sector. The conflict in Ukraine and the pandemic have underscored the importance of resilience and adaptability in the face of economic disruption and market volatility. Factors such as fluctuating interest rates, uncertainties in the rental market, supply chain disruptions, and inflationary pressures have contributed to this atmosphere of uncertainty. Investors now prioritize long-term stability and risk mitigation as they navigate through these uncertain times.
Okay, in the world of financial opportunities, U.S. investors find themselves tempted by the lower euro exchange rate. As they assess potential risk and reward of these various investment opportunities, an interesting forecast catches their attention. The U.S. market is expected to experience a 15% drop in real estate investment over the next year. This projection prompts investors to explore alternate avenues, leading them to discover the growing popularity and residential value add properties in Germany. Meanwhile, a striking observation emerges from comparing house payments in the United States to an average monthly apartment rent. The cost gap between these two has reached a record high of 57%, making house payments significantly more expensive. This piques the interest of U.S. investors as it implies that their cash could stretch further and potentially fuel more foreign investments, partially in booming economies like Germany. The advantage for U.S. investors are evident. The favorable exchange rate and price markdown of German real estate presents an enticing opportunity. Additionally, the timing of the potential investments assume a moderate recession in the future for the United States, further motivating investors to explore alternate markets. With a significant cost gap between housing and rent in the United States, it no longer seems sensible to invest heavily in domestic real estate, amplifying the appeal for more international opportunities. Investors see German properties as a safer investment due to the projected market growth and the stability. With the anticipated market expansion, the U.S. investors view these properties as more secure opportunities to compare potential uncertainties and diminishing returns in their domestic markets. As a result, they begin to shift their focus to allocate resources towards exploring and capitalizing on prospects offered by the German real estate market.
So in comparison to the UK, the German market excels in many ways. The first of which is the capital gains tax. In the UK, property owners are having to pay nearly 30% of capital gains tax when they sell their residential properties. On the other hand, in Germany, you will actually pay zero capital gains tax if you have held the property for more than 10 years. And if you haven't, you're still going to pay almost 5% less in tax when you sell your property. And this certainly helps property owners their urge to sell when it is time to sell. One good thing going for owners looking to rent their properties in the UK is that prices are finally starting to stabilize after a period of prolonged dips. Coming out of the recessional period, it will be good for property owners to see prices stabilizing so that they can be a little less worried about rentals. Fortunately for property owners in Germany, the prices are starting to rise on the tail end of a recession and are predicted to continue climbing in the future. This is partially in part to the overall rise in GDP that the German economy is realizing. The rise in GDP will increase salaries of most workers, giving them more capital to work with when they're searching for a home. This increased search will push demand up and consequently continue to push prices higher. Moreover, the market is expanding, and banks will have more confidence in the market in general, pushing them to be more lenient when giving out loans. With more people getting loans, the cycle will continue, at least for the time being. The growth in GDP, coupled with the simultaneous fall in unemployment rates, puts the German real estate market in a unique place of opportunity when compared to other countries. The attraction of more job openings will bring in people who are searching for places to live and will be a win-win for each party involved. Unfortunately, the same cannot be said for the UK, as unemployment rates are currently rising, leading to an overall weaker economy where citizens' purchasing power is falling. The final key comparison between the UK and Germany is in regard to energy costs. UK citizens and property owners are currently facing moderately high energy costs that do not look like they'll be falling soon. What's worse is that there seems to be no incentive besides simply lowering your energy bill to move towards energy efficient buildings and spaces. That is not the case in Germany. In fact, there is a government-funded bank that provides loans specifically for people looking to move into energy-efficient homes that give out loans at an interest rate of just 1.5%, the rate that you cannot get anywhere else. When it comes to energy consumption and conservation, Germany is on the forefront of creating the right infrastructure to incentivize and realize an impressive energy-efficient ecosystem within real estate.
To finish off with the German property market right now, interest rates are historically high all around the world, especially in Germany, making it more expensive to borrow money from the bank. That is not always a great sign, but has a flip side to it because it creates an investor market. High interest rates drive property prices down, creating a discount for investors. This has driven up the demand for rental properties in Germany, making an investment sector worthwhile. Renters can get larger properties for a discounted price, so investment in buy-to-let or value-add properties in Germany is booming, making up 28% of the preferred property investment. Although interest rates are high now, it doesn't mean that refinancing your mortgage isn't also a possible option later. There is a good chance in the future that banks will allow a majority of mortgage holders to refinance their loans so you can get a lower interest rate. German properties are also seen as safer investments because of the higher growth potential that is being realized. Now is the time for investors to take advantage of the discounted German market. Just a disclaimer, we are not giving real estate investment advice. This video is only meant for educational purposes, so we cannot be held liable for any damages whatsoever. Before you invest, seek help, a financial advisor, or consult other experts to make sure you are making educated decisions. We will include our sources in the description. Thank you.